John Batchelor with Larry Kudlow. The beginning of a new year. Larry Kudlow of Kudlow & Company, and we're looking at bullishness. And one of the reports today that Larry's already mentioned, we now managed to go to, which is the good car sales. Larry, I want to make sure. These are really good car numbers. Do you agree?
Well, they're solid car numbers. I mean, you're about 12.5 million. That's a good number. It's important to ramp it up to about 14 million. But I do think it's part of the improvement in consumer spending. So I'm relatively optimistic. They're not by themselves gangbusters, but it's a steady trend line.
We're joined by a man who's very involved in General Motors and delivering these wonderful numbers today, Don Johnson, Vice President for Sales for General Motors North America. Don, did you arrange this because you were going to be speaking with us tonight?
Actually, it was a pleasant coincidence, John, I have to tell you, but we're very pleased with the way the year ended up.
Very pleased. That's a salesman for you. Lou Ann Hammond of Driving the Nation also joins us. Lou, can you confirm that they didn't cook these numbers for us tonight?
I'm going to believe Don, and I'm going to believe Ford and the rest of the group on these tonight, and they are good numbers indeed.
All right, Don, what explains this? Why the sudden burst of buying?
Well, I think, as you indicated a few minutes ago, it wasn't necessarily a sudden burst. I think it's a continuation of the steady growth that we've seen. You know, we had an industry run rate in October and November of about 12.4 million, and we're up to about 12.7 in December. So, you know, we just see it as that steady increase that we've been expecting and forecasting, and we think importantly what it does is it gives a very solid base for 2011, and we're also quite optimistic about next year.
How are the, let me ask you this, how is the car loan situation affecting this? I mean, credit has always been tough. How is that impacting these numbers?
It is having a positive impact. There has been some loosening of credit. I would say the financial institutions are starting to become even that much more competitive and looking for consumers' business. And the consumer credit scores are starting to get a little bit better as, you know, confidence gets better, employment improves, albeit so slightly. So that is having an impact on it for sure.
And how is GM's numbers in this, breaking it out?
We had an excellent December. We were up 16%. It was our best month in 2010, and it capped really a very successful year for the new company where calendar year sales overall ended up being up 21%.
So, Luann, what's your read on this, huh?
You know, there are a couple of things, Larry. I like the fact that of their financing, only about 4 to 5% is subprime. That speaks of solid, good customers. Not very many people bringing their car, losing their cars. One of the things I wanted to ask you is there a correlation between pickup sales and construction starts?
Are you asking me?
No, I'm asking Don Johnson.
There is often that correlation. At this point in the recovery, it's weaker than it would be normally. There's a lot of other small businesses, though they're slowly starting to refleet, replace their vehicles, which are simply getting too old to operate anymore. So, you know, because housing is still relatively weak, we're not seeing that kind of push that we will when housing gets back from that sector, but there are other sectors that are helping drive pickup sales.
Don, the Wall Street Journal is reporting that in 2010 for the year, Ford and Chrysler gained market share, but GM lost about a percentage point in market share. Why is that?
Well, actually, if you look at our core brands, which we are now focused on, we gained 1.6 points of share. It is true if you compare us to the old company with all the brands that we would be down about 0.8 of a point of share. But again, we sold over 118,000 more vehicles with our Ford brands than we did with 8. And the Ford brand is really where we're focused on going forward.
You know, Don, you've got cars, the average industry is about 60 days. You've got cars at 90 days. Any kind of incentive that you're going to give on those?
I mean, our overall inventory is actually in really good shape. We're down to about 511,000, 510,000 units. Yeah, there's some that are a little bit higher than others, but there's certainly no vehicle lines that we have right now on dealers' lots where we feel we have to run out and put additional incentives on just to move them. You know, one of our strengths this year, both in terms of the quality of our share as well as our profitability, has been very prudently managing our inventory and our incentives. We've been successful with it, and we're going to continue to do that by monitoring production going forward.
We're told, Don, that there's a profound change for the car business in America from the 20th century, that instead of being dominated by 3 companies out of Detroit, we now have 7 companies, including companies from overseas, very well-known companies, that are competitive. Has that helped you, or has that made things more difficult in rebuilding General Motors?
I think it's always healthy for an industry and for consumers to have good competition. I do think as we've come through the crisis and our own bankruptcy, that getting our balance sheet in order, getting our cost structure more competitive has allowed us to compete on a more level playing field than some of those competitors. So going forward, I think that that level of competition is very good for us.
What's the next estimate now for the pay down of the remaining taxpayer bailout loans?
Well, the rest of the government ownership is in equity right now, so that will depend solely on when the U.S. and Canadian governments decide that they want to exercise their right to sell some of that additional equity.
What do you hear on that? What's the thinking?
Tough to say right now, to be honest with you.
Don, what we want to know is, General Motors now, are you operating, what I want to know is, are you operating under a cloud because of the bailout? Do you see that in your sales? Is that a hesitation for the audience?
From consumers, you mean?
Yes.
It has been there in the last, 12 to 18 months. But I would say that, once we finished with the IPO, there was quite a change in consumer sentiment that we saw. We saw a substantial increase in traffic on our websites, much more overall interest in the company, both in terms of our products as well as our stock, as you may have seen. So while there is still some sentiment out there, we see it waning quite quickly right now.
What's the best-selling cars right now for GM?
Right now, our best sellers would be our crossover portfolio. There's been quite a shift in consumer taste towards crossovers where they can get both the fuel economy as well as the utility in an Equinox or a Terrain or an Enclave or an Acadia. So those vehicles are up 50% year-to-date in sales. The other segment that's doing very well is the Chevrolet Silverado and the GMC Sierra. Our pickups are selling well, up almost 20% this year.
That, by the way, is a good small business indicator.
Absolutely, and that goes back to the question we had earlier from Luann on construction starts. Other small businesses are definitely replacing their fleets and driving that business.
So how's Luann's favorite car selling, the Volt?
We basically delivered every one we built in December, and that's just over 300 units.
So can we do it without tax credits?
I think we can, but this is the type of industry, the electric vehicles or extended range vehicles, where to get the pump prime, to have consumers understand what they're about and see the benefits, government assistance is very important, I think, for the industry overall, and that kind of initial priming will ensure that we have long-term success.
For 2011, Don, what do you want to see for your sales and for the overall number for Detroit, the one that they smile at in December?
I think for 2011, we're projecting about a 13 to a 13.5 million industry, and we would be very happy with that level of growth. I think we've shown that we can be very profitable at less than that, but that'll allow us to continue a profitable growth, steady growth, without being crazy with incentives, without having people come to work and leave work if there's, a radical change in the market. We're also looking for consistent government policies, as we normally would. We're looking for some consistency in gas prices. We anticipate they'll rise some, but it's really the spikes in gas prices that hurt us the most. So a predictable future is always good for our business.
And Lou, how does that compare to, say, 2004? Wasn't that about 16 million units?
Right. That was about 16 million units, and the average age of a Buick buyer was about 70 years old. And in conference call today, Don, you said that the fastest growing brand was Buick, and the biggest growing brand of luxury vehicles was Cadillac.
Exactly. Yeah, we're really pleased with the performance of Buick and the turnaround in that brand's image, as with Cadillac. Two very good success stories for us. When we look at 2011, it's going to be about those continuing successes, but also about Chevrolet both with the Volt as well as with the new Chevrolet Cruze that was just launched.